If you're a forex trader and you know that at this stage of your forex trading career, you don't have a forex trading strategy that works, you genuinely and sincerely know that you don't have a forex trading strategy that has an edge in the forex market, then this video is for you. There are three things you need for you to be able to develop a trading strategy. The reason why you don't have a trading strategy of your own and the reason why you have been jumping from one trading strategy to the other is because you don't want to sit down and put the obnoxious amount of work needed for you to be successful in the forex market. Now, let me show you these three things that you need for you to be able to formulate a trading strategy of your own. Of course, this is Eselsa-FX and you are welcome to my trading channel. For you to be able to develop a strategy of your own, a strategy that works, so that you stop jumping from one Telegram group to the other in search of strategy that has 100% win rate. You just need three major components. The first component you need in order to develop a trading strategy that works is market structure. No matter the strategy you use, because at this stage of my forex trading career, I don't even like forcing anybody to use my strategy or forcing you to use another person's strategy. It is better you sit down, put in the work and develop your own strategy. All right, and for you to develop a strategy that works, you need three major basic knowledge from the charts that will enable you to develop a trading strategy. One of them is what? Market structure. All right, market structure is one of the most important components of any trading strategy. Of course, market structure is just the study of market behavior. Alright, and for you to be able to make any trading decision in the market, you need to understand the behavior of the market, because the way the market behaves will determine how you approach the market. So from the knowledge of market structure, this is where you should be able to know the people that are in control of the market. If the market is trending up, you know that it is an uptrending market and you should be looking for a buying opportunity. And if the market is trending down, you'll be able to know from your knowledge of market structure that the market is trending down, so you should be looking for selling opportunities. So the knowledge of market structure is very important component of your trading strategy. This is what will answer the question of who is in control of the market, and you need this knowledge for you to be able to develop a trading strategy. Now, after market structure, another knowledge that is also very important in your trading strategy, which is compulsory, no matter the strategy you use, you must be able to apply the concept of point of interest, the concept of area of value. Alright, in as much as you've been able to analyze the market structure and you found out that the market is trending up, that means you are looking for buying opportunity. Another important question that your trading strategy must answer is, where do I buy from? Most of you, especially the newbie traders, might not know that the fact that the market is trending up or price is going up and you should buy doesn't mean you should jump into the buy immediately. So in order to mark out your point of interest or your area of value, this is the point or the area where you are going to be buying or selling, depending on the market structure. Alright, so there are different concepts you can use to formulate or mark out your point of interest. And these concepts are a lot, there are many. You can use the concept of support and resistance, S and R. You can use the concept of order block, right, OB, as a concept to mark out your point of interest. You can even use fair value gap, which is very popular among the smart money concept traders. And you can also use your fib retracement tool as a strategy to be able to formulate to mark out your point of interest. Are you seeing that the importance of point of interest in your trading strategy cannot be overemphasized? And these are different methods you can be able to use to mark out your point of interest and formulate your own trading strategy. When somebody says, I trade support and resistance level, that means the person marks out his point of interest and the area of values using support and resistance concept. Some people trade order blocks, some people trade fair value gap and use Fibonacci retracement tool. These things are different tools you can be able to mark out your point of interest. So your trading strategy must contain the knowledge of market structure. It must contain the knowledge of point of interest or area of value. You should be able to train your eyes to be able to spot these points of interest and areas of value in the chart where your buying and selling opportunity will take place. Now, finally, your trading strategy should contain information about candlestick pattern. Right? Candlestick pattern is what gives us, the forex trader, the entry signal. Most of our signals comes from candlestick pattern. All right, so this candlestick pattern will enable you to be able to know exactly the time to buy. All right, the candlestick patterns have predictive value. So when this pattern, you know the pattern that will form in your area of value, that will give you that confidence, you know that buyers are stepping into the market or sellers are stepping into the market. And when the candlestick pattern has completed forming, you'll be able to buy or sell. So for you to be able to formulate a trading strategy that works, you just need three concepts: market structure, candlestick pattern, point of interest or area of value. Now, let me give you a simple illustration of how to combine these three concepts to formulate a trading strategy. Very simple. Look at this now. When I open my chart and I see price making this type of movement, right, what it means is that the market is actually trending up. How did I know that the market is trending up at this point? Because it has been making series of higher highs and higher lows, higher highs and higher lows. I was able to get this information through the concept of market structure. I hope you guys can understand how we can be able to apply market structure to be able to formulate a trading strategy. It is the basics. You cannot be able to develop any strategy. No strategy is formed without incorporating market structure into it. Now, market structure is done. I've been able to know that I am buying. Why am I buying? Because the market is trending up. The structure of the market is bullish. The market is trending up. Now, after that, the next concept now is, if this price is trending up, where is the best place for me to buy to be able to enjoy this buy movement? That is the concept of area of value. Where is the best area for me to be able to buy? And remember, as a forex trader, you are told that you should always buy low. Right now, price has risen to this particular level. It's not really advisable for me to take my buy at the beginning of a retracement move. I have to wait for price to complete retracement, and then so that I can be able to buy lower. This is where the concept of area of value comes. You can decide to use the concept of support and resistance to mark out your area of value. You can even decide to use the concept of Fibonacci retracement, which is even one of my favorite methods. I can use my Fibonacci retracement tool this way to be able to mark out with high level of objectivity the best place for me to buy. If you check, you see that I want to buy at my golden zone, which is my 50.0, between my 50.0 and 61.8 Fibonacci retracement level, which is also slightly below the discount area. Right, so this is my buy zone according to Fibonacci retracement strategy. That is why I told you that the concept of point of interest is very important. The fact that the market is buy doesn't mean you should jump into the buy immediately. You have to mark out the best place to buy so that you'll be able to maximize your profit in the buy and minimize your loss. So if I use the concept of Fibonacci, that means this will be my buy zone. Right now, the next concept I need for me to be able to buy after waiting, because first of all, this is where patience is needed. I have to wait for price to pull back into my buy zone. If price pulls back into my buy zone, I don't just buy immediately. I need the last concept, which is the concept of candlestick pattern, for me to be able to buy. Now, if price pulls back into my buy zone and gives me this type of candlestick pattern, which is maybe a rejection candle, right? I'm able to get a rejection candle at my buy zone. This is a rejection candle. Or I'm able to get something like this, a doji. You understand? This is what we call dragonfly doji. Or I'm able to get an engulfing. Or I'm able to get a bullish momentum candlestick after so many rejection. Good. This will be my point of buying. This will be my buying signal. Have you seen how I've been able to formulate a trading strategy simply by combining the concept of market structure, area of value, and candlestick pattern? Now, when price approach this my area of value and gives me a candlestick pattern, if you're a forex trader and you've studied candlestick pattern very well, you should be able to know the different candlestick pattern that signifies the presence of bulls or buyers, and the different candlestick pattern that signify the presence of bears and sellers. So whenever you see such candlestick, rejection candlestick, bullish rejection candlestick, you should be looking for opportunity to buy. If you see the candles form at your buy zone, which is your area of value. This level now is my buy zone, but remember, I'm not really going to rush into that buy immediately. I have to wait for price to pull back into the area and then give me candlestick pattern, give me rejection, give me indecision candles, give me engulfing, or give me a bullish momentum candlestick in the direction of this my buy. This is when I will now take my buy. And the other part of the strategy is the simplest part. You have to put your stop loss where you cannot be able to lose more than whatever percentage of your account you are willing to risk in that trade, and using the appropriate loss size, and then target at least 1:2 risk to reward ratio. And this is you formulating your own trading strategy. Now, ask yourself this question: why don't I have a trading strategy that works? Is it because of laziness? Is it because I've not decided to put in the obnoxious amount of work needed to study this chart, formulate my own trading strategy, instead of jumping from one mentor to the other in search of trading strategy that is 100%? Because if your goal is to get a strategy where you will not have losses, then you are not ready to trade the forex market. Each of these strategies, even if you like use Fibonacci retracement strategy, use support and resistance, use fair value gap, use other block, no matter the strategy you use, there are normal losses accrued to every trading strategy. Alright, so you should be able to practice proper risk management so that you'll be able to minimize your losses and then maximize your profit.